What's going on, everyone? This is Jordan with Conquer Trading and Investing, and you're looking here at a chart of the S&P 500. Now, whether you trade the ES, the SPX, or the SPY, the levels that we're going to look at in today's video is going to help you navigate the markets. Let's take a look right now. We're looking here at the S&P 500, and what do we see for today's price action during New York? We see price coming all the way down to the support at 29.72 and finding support there. But more importantly, two things. It's closing at the highs of the day and it's shaking off. It's bad news. It's shaking off a bit of worry. Bull markets climb a wall of worry. That's exactly what is happening today. Let's take a look at what we see and how we're going to be able to trade this. Now, I want to be very clear. I'm going to separate two things right now. I'm going to separate the S&P 500, the index, and foreign exchange, Forex. All right. I just want to be very, very, very clear. When I talk about in foreign exchange on the 8-hour time frame, that I only look to buy off strong support and sell in an uptrend and sell off of strong resistance in a downtrend. That I personally avoid sideways markets. And the reason I avoid them is because I'm actually looking to push my trades, my winning trades. But at the same time, I am supportive of anyone who chooses to do that. I think that in a sideways market, there's nothing wrong with selling resistance and buying support. Now, I look for trending markets, and I'm only looking in uptrends to buy off of support and in downtrends to sell off of resistance. And I think if you're not doing one of those two things, and you're not yet profitable, by making that switch, it's going to really help you a lot. Now, when I trade on the S&P, I am always very clear. That I will have my biases. For example, above this trend line over here, the buyers are in absolute control, and I have a strong bullish bias here above this trend line over here. Now and I'm very clear always that even with a bullish bias, that I will take trades on both sides of the market. You guys have all heard that before because I say it all the time. When it comes to the S&P 500, where I'm looking to actually take intraday trades and turn them into swing trades, even if I have a bullish bias, it doesn't mean I'm not going to play the other side of the market, right? You've all heard that before because I say it often. I say it a few times a week, right? And that's the case. Now, so when we're looking at this yesterday, and I also want to show you, right, what happened over here. There was a trade I took, the last trade I took before getting stopped out last night was right around this area. I took a short, right? We were in an uptrend. I had a bullish bias. I took a short and it wound up getting stopped out at break even, right? I have no problem on the index in an uptrend with a bullish bias trading both ways. All right. That's what I do. I just want to be very clear about that because there seems to be a little bit of confusion, and I want clarity in my community. I don't want any type of confusion whatsoever. All right. So taking a look at this chart here, we're looking at a chart of the S&P 500. You can see the performance here in yellow, and then we're looking at global liquidity, and you could see that S&P is following completely the global liquidity supply. Now, I don't have access to this data feed. This is off of Bloomberg terminal. You can see the source here is Bloomberg. You could see over here the data feed. I don't have access to that. I'm going off this chart alone, but it made me actually bring up a few questions of mine that I spent some time this afternoon looking into, and I wanted to discuss with you. I actually wanted to ask all of you first. Well, I don't think there was any reduction in the monetary supply during this particular period over here. Why is it that on this chart we're seeing global liquidity go down? And so that led me to doing a little bit of research. It led me to looking into M1 and M2 money supply. And then also this comment over here really caught my eye. It says money supply is not a measure of the Fed or ECB or therefore central bank balance sheet. I actually read all the comments on this thread looking for any type of answers. There was one that I actually liked. It said, why did the global liquidity collapse in March in tandem with the S&P 500? Because that's the answer that I was looking for. There were no responses to that question. I wanted to get a little bit of insight from all of you because to be honest, I originally was thinking when it came to monetary supply, right, that the global liquidity was the balance sheet of all of the central banks. And we know that's rising. We know that there wasn't a reduction in March of that, right? So I was researching just to confirm again, M1 and M2 monetary supply. I had to do some Googling, and I Googled that question. Why did the global liquidity collapse in March in tandem with the S&P 500? And I went through all of these links looking for any type of answer. And it wasn't until I got to this article from 2014 coming from the BIS, the Bank of International Settlements, which is the central bank of central banks, that I was able to gain some type of answer because it said global liquidity, right? So this whole document was on global liquidity. I went ahead and I was able to come down into the section over here on understanding global liquidity. And it talked about that the ease of financing has a very much life of its own, that it waxes and wanes with changeable perceptions of risk and valuations. It changes in value. It surges and collapses with risk appetite. How was risk appetite in March, right? Obviously, it was very extraordinarily negative. And then we see that liquidity collapses with that risk appetite. And leveraging and deleveraging private institutions. So that was my first understanding that the overall global monetary supply and liquidity are two different things. And over here, we're looking at liquidity. We're not looking at the balance again. We're not looking at the balance of the central bank's balance sheets. We're looking at global liquidity. Now, I don't pretend to be any type of expert on this, and you all know that I won't share any information about something that I don't feel comfortable talking about. This is why I'm doing this research. This is why I wanted to check in with all of you. Why? How is it the fact that this chart is showing global liquidity falling here in March? And we know that the S&P is following global liquidity, but a lot of people right now are definitely under the impression that the reason that the S&P is going up, a lot of retail traders are under the impression that the reason that the markets keep going up is because the expansion of the central bank's balance sheets, right? So this is different. It's following global liquidity. So we had to look into this a little bit more. So I came down to this section where it talks about that we're in a new phase of global liquidity. What does that sound like to me? Like central bank talk, right? Just always putting a spin on things. And I started reading, and it talked about the fact that it talked about in the second phase during the crisis in 2007 to 2009, banks in the advanced economies deleveraged rapidly, and credit as a whole fell relative to GDP. So when GDP is falling, right? What happens when GDP is falling? Credit is also then falling. It's relative to GDP. And then for the economies are deleveraging, right? That liquidity is going down. What happens right now as we're seeing, we understand that the central banks can provide liquidity, but not solvency, as we're seeing bankruptcies take place. What happens to the overall GDP, right? That's what we're looking at going further out. Now, it also said that as it kept going, I came down to this section over here where it talks about sustainability over the longer term. That's what I'm interested in, right? I'm interested in not on the temporary fix, but whether or not this current situation is going to be able to go ahead and sustain itself. A couple of things hit my eye over here. It says they should not be overly concerned by occasional disinflationary or deflation pressures. Right? What kind of situation are we in right now? Are we in an inflationary or deflationary? Well, we're worried that we might eventually see an inflationary type environment. But right now, we're definitely seeing a deflationary type of environment. So that is something that could put on a risk, that challenges a risk to that overall global liquidity. And then right below that, I came down to risks and resilience, and it talks about the fact in terms of global liquidity. This is really what we're interested in, right? In the financial cycle, which is now been going on for 12 years, right? We need to continue to monitor excess in leverage and risk-taking and credit creation. What's happening right now? Well, all those things are happening, right? And we need to take appropriate action where we see the emerging both domestically and global level. If we fail to take action, we are at the risk of returning to the boom and bust cycle that has proven disruptive in past. Do we think that the boom and bust cycle has ended? Absolutely not. Let's take a look at that really quick. I said yesterday we would start looking at this chart a lot in the future. I didn't think that it would be the next day. And we could see here, this is the boom. It's been going on for 12 years now. Is it possible that we've ended the boom and bust cycle and this boom cycle will go on forever? Well, I don't think so. It goes on to conclude saying that while we are in a new phase of global liquidity, we need to be aware of new risks, right? And some of these vulnerabilities are not just in the banks, but also in other financial institutions and markets that may have built up while liquidity was abundant, right? Now, liquidity could go both back and forth. We know that we were seeing that dollar crisis back in March. That could obviously peak its head again, especially as we are in this deflationary environment. The whole point of all of this that I'm sharing with you today is so that we are aware of the fact that global liquidity, as everyone is aware, is what the markets are following right now, is not the same thing as the balance sheets of the central banks, right? We needed to do a little bit more research that right there. This actually goes on to say, but for how long could this go on? Not sure liquidity can fix insolvency. We've talked about that here on the channel as well. That is the risk that is particularly a giant headwind in the future, or whether or not the continued strains on these businesses, particularly small businesses, lead to further insolvency, which is like it has a domino effect. Now, why all this is going on, I want you to be aware. We're looking at the number of Robinhood users. This is indicative of the retail investor, right? Their positions long in stocks is at all-time highs, right? Now, what's going to happen here? We did look at yesterday the fact that obviously institutions and funds are not really participating in this rally. Is it possible that it continues and goes on and on? Absolutely, but that does not mean it's going to. That does not mean that you just take a position long on the S&P hoping for 50 points to the upside simply because right now it's been rising. There are risks. Looking over here at the offshore yuan, this is the Chinese currency over here. You could see that it is risking. This is a clearer chart over here. This is the reverse. Looking at over here, you could see it's on the verge of losing this support over here, right? That's resistance on the upside, breaking above 7.2. That could really send some shocks through the system if this is to occur. Now, the Chinese go ahead and they set the value of the yuan every day. It's not a floating currency. As they are not so happy with their current relations with the U.S., they are letting this depreciate. If it breaks out above here, it's possible it could happen tonight. If that happens, this thing could really get out of control. There are plenty of risks developing in the markets. I want you to be aware of them. I know a lot of people are just they're under the impression that right now, since the Fed's printing money, since the monetary supply is increasing, they feel like, well, the Fed's got their back. They could come here. Listen, what we learned today is global liquidity is not the same thing as the Fed and central banks' balance sheets. All right, so what's happening over here? We put in another nice day here on the S&P 500. When I say another nice day, we have once again shaken off lots of bad sentiment, of bad news, right? You can see the markets right now are resilient. That continues. All right, let's take a look. Let's go down to the 1 hour time frame. Everyone who was with us on the live stream earlier in this morning was aware of the trade we were able to take in. I know I participated. I hope others did. Getting short over here. You can see this was right here, the signal after we broke down. Everyone knows who was here. For those that weren't, we were watching. I added in this local support this morning. And then I highlighted this trend line here, which had been acting as resistance and now as support, right? And I said, if we break below it, that's an opportunity here that we're rolling over, possibly looking at a short. I said that for that to happen, I was looking at the 15-minute price bar that made a lower high and then made a lower low without going above this area of local resistance, both trend line and horizontal resistance that was coming in right around $3,009, right? I was able to take a nice trade into the support right around the London close, taking profits there of just over 10 points, and then got neutral waiting for time of day. Here we are right now, back above that horizontal resistance, now flipped again to support. You could see it right here. You could see that this is both the trend line coming up, that's coming in right around $3,009, and the horizontal local resistance now flipped to support also at 3,009. Is there a trade here right now as we're coming into the close? Well, we still have a little time left. We're going to watch what happens. We have about 1 hour left to the close, so I will check in over the next hour with you and keep going here. But right now, I'm completely neutral, not looking for any trade. Again, there are a lot of risks. Now, it does seem that the U.S. here is kind of backing off a little bit. The Chinese have actually kind of called their bluff to a large extent, and it depends what the next move is out of the U.S. Today, Secretary of State of the United States testified before Congress and actually said at this point that the autonomy of Hong Kong is no longer in effect. Now, it's up to the Congress what happens next, whether or not they go ahead and pass any sanctions. That could then obviously cause a further escalation at that point. That might see a further bit of risk off. We're seeing that happen a little bit right now. The dollar and gold firming up a little bit. We're seeing the Australian dollar come off a little bit. We saw the effect the S&P earlier this morning, and then after it seems that the U.S.'s response so far is a little bit muted. We're kind of back up here above this area where it puts us back neutral. Now, I'm not looking to take a long over here myself. There is too many political risks right now, geopolitical risks overhanging the market through now and the end of the week. I'd rather get that out of the way and then take the safer trade on the long side or see what happens. I am interested in still perhaps sometime this week looking to take a short trade over here, a sell trade on the S&P 500, whether you're executing on the ES, the SPX, the SPY, that's all irrelevant. It's all tracking the same thing here. I'm looking right now at the S&P 500 index. This is a CFD that I'm following. You could see why we're above this area of trendline support at 3,009. And also this horizontal local support, right? You can see the resistance broken, turned into support. We're back now neutral. I'm not looking for a long side trade over here. If we do break down below here, would I be looking to go ahead and look for a sell side trade again? Absolutely. Last night, obviously I got stopped out when I took the breakdown over here. I got stopped out. I was able to take some of that back earlier today. Neutral again. Will I take another side? Absolutely. What I see in the markets, I see a little bit of perhaps weakness developing. I am very interested in seeing if I could take advantage of that. Now you can see the markets today right now as they're closing towards the high of the day. They're just a few points off. Now, this is actually a little bit too rich for my blood, meaning I'm not looking to chase the market up here. Yes, this is some beautiful price action put in today. Now, what it appears to me, it seems to me that what the market is saying, they're not so concerned about what the response from the United States is going to be to China. We'll see. We'll see what happens actually in the last 2 days. Tomorrow and Friday are going to be some big days on the market, and we're going to see whether or not this current risk on environment quickly and sharply turns to risk off or not. What I'm watching overnight right now, I'm hoping that we actually come up here and take out the overnight highs. I'm hoping that we come up and test this resistance, which will be somewhere around 30, 48, 30, 50, right here, that trend line resistance. And that's where I'm looking for the market to top out. Now, there's no way. This is so bullish. We all know that above this trend line over here, the trend line right now is somewhere around, let's call it, to make it easy, 29.78, that we have this bull side bias, that the buyers are in control. They've shown that today. They were able to go ahead and turn this around. We also know here that this support, this horizontal support coming in at 28.88, right very close to that sloping up in trend line, is also the line in the sand where as long as price is above that, buyers are in control. Nevertheless, we are coming into an area of resistance. Now, it is quite possible that we're able to break above that trend line resistance. You could see it over here. It was resistance. This was back on the 17th of April. Then you could see over here after breaking above right around the 30th of April, that was then support, that trend line. Here we are right now. This comes into play tonight. Break above it. Yeah, this is where it gets really nice. We have some really strong strong resistance all the way up at 30.97. That will be something if we trade up into there, up in that area between 30.97 and 31.32, that I will be looking to actually fade off the resistance, right? Until then, the plan remains buy off support, but I'm looking for some strong support. Was that strong support that we bounced off today? Maybe. Price action is totally favorable, but that came up too high, too fast. There's no way I'm chasing after that. If we break down below, let me zoom out. If we break down below this near-term support that we have today, right? If we break below the level of 3008, 3008, and this trend line support over here coming in around the same level, at that point, that is saying to me that this was actually a false move. This is taking buyers, putting them on the wrong side of the market. We're going to be going into the weekend, Thursday and Friday, we're going to be coming on to risk on as tensions between the U.S. and China possibly come to some type of headwind. Does the Congress go ahead and impose sanctions on China? That would absolutely flare up the situation. We'll find out. We'll find out if the market price is in or not. No way tonight I'm looking for any type of long side trade. I will continue as long as we're above our line in the sand. Our trend line over here coming down at 28.78 right now. As long as we're above that, I'm looking to buy off of strong support. For me right now, the next trend line I'm interested is over here. That's coming in right now. It's coming in right now at 29.28. Right now, I prefer to stay neutral, wait for a bit of a breakdown. If that does happen, why I'm available to trade, and it's a break of this trend line over here, and a break of the horizontal support coming in at 3008, that's a place that I definitely want to attack and look to sell to the short side over here. And aside from that, then I'm perfectly happy staying neutral until tomorrow. We're going to take a look at the markets at 9 o'clock a.m. Eastern time. If you're not getting the updates when we go live, go ahead and join the Telegram channel below. You'll be alerted. We're going to take a look at the markets a half hour before the U.S. equity markets open. We're going to plan for the session ahead and see what we could do. The first couple hours, we're trading it live together. If any entries occur, we'll take them live. Until then, everyone, have a wonderful day, and I'll talk to you tomorrow.